we are back talking about testing internal controls. Now that we understand the risk of material misstatement, well, we understand the inherent risk, and we understand what controls should be in place. To really understand the risk of material misstatement, we have to understand control risk. So we're going to have to test them. Our client should have in place a number of physical controls, including separation of duties and performance reviews. So we're going to test those, right? So we're going to test, do they keep the materials locked up? Are there documents that transfer them? Who signs them? Who's authorized? And are the people who are authorized different from the people who do the accounting, who are different from people who have custody of the asset? Performance reviews, in the case of cost accounting, we're typically talking about variance analysis. So what are they doing in terms of that? And we are testing if they're doing what they're supposed to be doing. Remembering the directionality of controls. So these are controls over a process. The process has a direction, right? So the process starts with somebody orders a production run, and then it goes into work in process where we get some raw materials and some labor and some overhead, and it moves into, right? So there's a process, and the directionality means we're testing for completeness. Did everything that started out the process get in the books? That's completeness, right? The books are complete. And then there's occurrence. Okay, everything that's in the books, we go back, we vouch back, right? Trace for completeness, vouch for occurrence. We vouch back and say, okay, that was real. That's not some fake inventory number. That really occurred. All right. So, and when we're done with our testing, paying attention to direction of our tests, then we'll be able to make our control risk assessment. And once we have our control risk assessment, we combine that with our inherent risk assessment, and now we know our risk of material misstatement. All right, so in this table, they've matched up, what could go wrong. We've already talked about that, the inherent risk. We've already talked about the controls. So now how are we going to test these controls? Well, observation, things like observing the separation of the accounting function from the production and inventory control. Inspect evidence. Inspect reconciliations, vouch dates, observe allocations, watch what people are doing, test them, examine signatures. So we're testing controls. We're not testing the number balance. That's the substantive test. But when there's a production run, does somebody authorize that? Look for that type signature. So that's an authorized run. Next, as raw materials are moving in, are there actual tickets to move that stuff? Is it signed by the people who has to sign it? Is there the same thing with labor? Has somebody requested a certain amount of labor? Are they getting it? Is that happening? As things are moved out, there should be another ticket. There should be inventories periodically run. Right? So people are counting to make sure. There should be variances and reconciliations checked. What are they doing to test for variances? How do they know if the production run matched with its budget? Right? So I'm looking for those controls and I'm seeing, are they doing them? Right? I'm not coming up with a valuation number. I'm not doing a substantive test. But are they doing variances? How are they doing them? Right? Who's doing it? Right? Observe it being done. So I'm vouching and tracing and testing. Let's talk about directionality of tests. We've talked about this before. Where you start your test, right, where you pull the sample from, matters, because now you're going to either go forward or backwards, and it tells you what you want to know. It's going to give you relevant information, right? So when you're testing completeness, that completeness assertion is management says everything got into the inventory, right? The inventory number has all of it. We didn't leave any inventory out. Same thing with cost of goods sold. Cost of goods sold number has all our expenses related to that good. There's nothing left out. So you're making sure that that number is complete, right? That nothing got left out. So in order to check that as an auditor, you're going to pull a sample and you're going to test that sample and see, make sure it's complete. So you have to start your sample at the beginning, right? Test for TCU, test for completeness or understatement. So that means you're starting at the beginning. So you pull a sample of production orders. That's all the things they produced, right? They've ordered these 1,000 production runs, right? Then you go forward and you say, okay, well, did we get a bill of materials to order the raw materials? Did we get personnel requested? Great. Then we go on. Did it actually get issued? We requested it. Did it actually get issued? What did we actually use? What were our cost reports? And you go on to the labor and production cost reports, right? So you trace it through the cost accounting, and now you know it got in there, right? That's completeness. The reports are complete. Then you're testing for occurrence. That's where you have to go back. You have to start with what they're telling you occurred, right? So the ledger of inventory says we have this much inventory. Our inventory balance is $5 million. All right, so now you take your sample from there. Okay, so here's a bunch of different inventory that was made, right? That was manufactured in the production cycle. Here's these different batches that were made. So I can go back to the labor. Yes, that got labor. Go back to the overhead analysis. Go back to the production cost report. And I can match up all the way back so I can say, yes, that actually occurred. There's not fake inventory out there. And that's what occurrence is. Okay, so you test the controls through observation, vouching and tracing, inspection. You're making sure that signatures are on things, right? You're not necessarily testing the numbers. Next video will be substantive tests. That's where you start testing numbers.